Why the cost of living is still a concern when inflation has declined to 2.6%, where in the past elections, especially the last 2 years, voters have ranked inflation as their top concern. And as we can see, all these commodity prices is still above their pre-COVID period. Let's take a look at the crude that was COVID and that was pre-COVID level. And now the crude oil prices is still higher than the pre-COVID level. So is the soybean oil. And we have the corn as well. And the rice, this is pre-COVID, and this is currently the rice prices. And especially the gold, the copper, and the meat prices, we could see that this is the pre-COVID level. Now they are at the much higher level. And consciously or subconsciously, investors or the mass consumers somehow feels that the cost of living will stay higher for longer. And there's always a risk that inflation, that they feel that it may creep back up again. I'm Kon Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. And before we get into today's subject, please do take some time to read into the disclaimer. And if you find that the inflation may stay higher for longer or potentially it may even creep back up again, there are a few things that we can all do. Number one is to reduce our borrowings, as maybe the lending cost or the borrowing cost will increase or may increase. And number two is to invest, hedge, or trade into markets like the gold, commodities, stocks, Bitcoin, interest rate markets like the yields, and this is some of my favorite to hedge into inflations, or even the commodities itself. So today I will focus on the feeder cattle, and you may not be too familiar with it, but that's all right. And you can definitely apply the same strategy, which I'm going to share shortly later, to other markets as well. And this is the year where the inflation hit a high of 9%, and that was in 2022. But today, the meat prices is at its all-time high, breaking above their 2014 high and breaking above the 2022 inflation. And how about the rest of the commodity prices? Will it follow subsequently? And I believe that with the problem with the global debts and QEs, the risk is there. Commodities like the gold could be the leader of the pack. And let's take a look at the feeder cattle. And when I look at the long term, of course, I'll look at the monthly chart, but this is super long term. This is the 12-month chart, which that every bar you're seeing here is the yearly chart, but we can track back all the way to the 70s. And how I get started about identifying trend is that first, I look at all this significant trough. And we could see that how I draw this uptrend line, and is touching quite numerous significant low beautifully. And what I do is that I will try to mirror it and try to find a significant peak. And when I project upwards, I could see some relationship, and I could perpetually use this uptrend line. Not just on the yearly chart, on the monthly chart, on the weekly chart, daily chart, and perhaps the minutes chart as well is applicable. Now, let's say, for example, I'm going into a swing trade into some position. And basically, the whole idea is that first I have to recognize where's the trend. If the major trend is uptrend, I will try my best to buy on dips. But of course, if you're a trader, I do not rule out that you can't sell short. You could, but make sure that since you're going against the trend, you try to take your short position short term. Now let's look at the daily chart for if you're into hedging or swing trading. Just ignore all this big arrow. But what I'm going to do is that I'm going to squeeze as tight as possible to to understand where are the significant low for this feeder cattle as within sight. And what I'm going to do here is that, and all this line being drawn it was the yearly chart. It is still applicable, but I think it makes no sense if you are going to get into the feeder cattle right now. Say, for example, you're going to plan a trade. And what I'm going to do is that always look out for a significant low, and then you try to connect the dots. And this is what I call the primary uptrend line. And I apply this throughout every market. And this is, I'm going to apply this in feeder cattle. And I'm going to further refine it to a secondary uptrend line. And this is what you're going to see here. And this will be my secondary uptrend line. And you can see how beautifully I've touched the significant low, low, low. So what I'm trying to say here is that in every retracement, especially for this one, let me just recap back. When is the best time to enter into the feeder cattle is relationship like this. I'm going to blow them up a little bit here. Is that we could see that there was a reaction here. You can call it a bullish engulfing body if you want to. So the best time to enter into the feeder cattle, if you're into swing trade, remember earlier what we planned was look at the long term. Is a long term uptrend. You do your best to find opportunity to buy on dips. And this was a day where with this closing, the next day it will be a perfect buying opportunity. As we could see here, the day itself, it opened at 237.95. Say, for example, if you're going to buy at 237.95, 237.95, and definitely you're going to put a stop loss, say, for example, because if I take it as you're a trader, you're trading into the midterm for a few weeks, definitely a stop is a must. And the stop will be at this lowest point here, which is the low point you can see is at 232.85. Let's say I put it at 232.80. And this would be my stop loss. 232.80. Was that the low? 232.80. And this could be my stop loss. And of course, that's hindsight. But what I intend to do here is that I could see that is reacting to this yearly chart pretty well on this daily chart. If it's close and maybe today as it open is going to give me another down move, and this could be a period where you may want to consider take profit if you've entered, or even to do a sell short. Say, for example, you do not have any position because it's pretty reactive. You may consider take a sell short position here or put a stop loss right above. When the unemployment rates are high, it affects a fraction of all of us. However, when the inflation is high, it affects all of us. And we cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I'd love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.